welcome to the Airlines Weekly Lounge. I'm your host, Edward Russell, and this week I'm joined by my co-host, Jay Shabat, to discuss the Routes World Conference in Istanbul and earnings at American United. Enjoy. Hey, Jay. How are you doing this week?
I'm good, Ned. I understand that you were in a very interesting place this week.
Yes, I am fresh off the plane from the Routes World Conference in Istanbul. It was held Sunday, Monday, Tuesday there, and I had a lot of great conversations with airports, airlines, the advisors that talked to all of them. It's a really fun event.
Yeah, cool. Any particular person or airline group that you spoke with, learned anything interesting to share?
Well, I think top of mind for most people is, planning at this event. And this is an event, for those unfamiliar, where basically it's been described as speed dating for airports and airlines. They meet, they sit down for like 15 minutes and talk about, oh, you should fly, airports say, oh, airline X, you should fly this route to my airport and why. And so the conversations, for the most part, are about looking at 2025, because 2024 schedules, at least long haul, are mostly sets. But airports are eager to get flights back, especially long haul flights, international, which has been very profitable. But the truth is, in a lot of discussions, aircraft, the supply chain limits that we've talked about on the podcast and written about in the issue, really are limiting what airlines can do at this point. They've only got so many planes coming. They don't know how quickly Airbus or Boeing are going to be able to rectify their problems. And then, of course, there's the engine issue that's affecting next year. So growth is not as, robust as I think the industry would like, but maybe that's good because there's, of course, the economic, continuing economic concerns globally, and the Middle East conflict in Israel was definitely something that came up a lot, and that is localized, not expected to affect, say, transatlantic demand between Europe and North America. But for airlines flying in the region, it is something that they're watching closely. I mean, while I was there, MEA, Middle Eastern Airlines, it had to evacuate their fleet out of Beirut because there's concerns that the conflict could expand from Israel to Lebanon. So it's, there was a lot of good conversations, but there's still a lot of concerns.
Yeah, and you wonder to what extent the recent events in the Middle East will carry over into long haul international travel, more broadly. I don't. United kind of spoke to that a little bit, and they said no, not really. It's our Tel Aviv market is affected, but not Europe, not everywhere else. But we'll see.
Yeah, but then the greater thing is, like, what if oil prices go up? That could
Right. That's
definitely
another.
hit airlines' profitability. And Pegasus Airlines CEO, and I'm not going to try to pronounce her name because I know I will butcher it, she spoke that demand for Turkey, for example, is still very strong, and they're growing a lot, but she is watching the situation in Israel and the Middle East because that is right on their doorsteps, and that could affect them. Turkish Airlines, they didn't speak at the event, but they were one of the largest foreign airlines into Israel, and they've suspended all flights. So it's definitely on their radar. Oh, one of the fun things that I did listen to, speaking of Turkey, was, Istanbul is this booming market that has seen so much capacity come in, but Pegasus Airlines CEO, she was saying how yields are actually starting to come down because a lot of airlines have jumped on that bandwagon. And now, even though visitor numbers are up and people want to go to Turkey and the market's booming, airlines are adding flights faster than it's booming. And, like we keep saying, when supply outstrips demand, fares come down. But Pegasus still thinks it's going to post one of its another, maybe not record, but globally impressive profit margins, Jay, that I'm sure you'll fill us in on when they do post that.
Yeah, no, sure. That's all interesting. And Turkey has been a superstar market in the post-pandemic era. And for that matter, even pre-pandemic, just tremendous amount of growth there. Huge tourist market, just impeccable geography for just connecting all parts of the world. And
Except for Australia, so far. It still
so
has.
far,
They
so
still do
far.
not have any flights to Australia, but that is Turkish is working on that.
Coming soon, right?
Coming soon. Yes, I mean that's one thing that I really wish that they had had at the event was Turkish Airlines had talked more about their plans, but alas, I tried to speak to their chairman, but he was busy while I was in town, so that did not happen. Still, it's a fascinating market, and the growth there is really obvious.
It is, and just one aspect of that growth that just absolutely stuns me is how they've been able to add so many new routes to the United States. I mean, and the Americas more generally, but I mean, you're starting to see them put planes down in Detroit and Orlando, and I think there was one or two other secondary markets that they have coming. I mean, that's something I never imagined that a flight from Orlando to Tokyo could that you could support that, but that just testament to the power of the Istanbul hub.
Oh, absolutely. And the airport there is gorgeous. So this is my second time flying in and out of IGA Istanbul Airport. And it is a massive facility, beautiful, good for connections. They got to work on their taxi times for arriving flights. I now have arrived twice on, I think, the furthest runway from the terminals, and taxi times are lengthy, but still a very efficient connecting hub. And, definitely is, I mean, it is the third Gulf super connector after Dubai and Doha. So, and that definitely is obvious.
Yeah. No, all good. That
Well,
sounds like a fascinating trip.
it was a good trip. It was a good trip, and listeners, you can read more on airline in the next issue of Airline Weekly, and that we are having. I'm still filing stories that'll be on AW Daily. With that, we're going to take a quick break, and we're going to talk about the world of airline earnings. And we're back. So Jay, this week we've had United and American have reported. What are the highlights?
Okay, I'll read some numbers for everybody. So we had Delta as Delta went a week earlier, and they delivered a 12.7% operating margin, 12.7. United came in right below 12.2, so 12.7 versus 12.2, so neck and neck. With the interesting aside here that Delta actually paid only $2.78 per gallon for fuel, whereas United paid $2.95. So, quite a substantial difference there. And that probably has something to do with Delta. Their refinery in Philadelphia may have helped with that. So the question, sort of the broader, question here is, Delta has for many, many years now been the profit leader among the big three. So is United, catching Delta? Now traditionally United sort of has a better third quarter, tends to be better for United than Delta, just the nature of they have a lot of east-west flying that peaks in the third quarter. So I think it's too early to, declare United as, on the verge of surpassing Delta or anything like that. But that's kind of a horse race to watch. Now, American, unfortunately, the story's a little bit sadder there because they only had a 5.4% operating margin. This is all, by the way, all excluding special items. They actually, American had a negative, they actually posted a number that was negative because of some pilot,
one-time payment to their pilots, and
exactly.
Their pilots ratified a new contract in August, which we've mentioned. So
right, but right, and that's we'll put that aside because that's not a recurring thing. But 5.4%. So why is American underperforming Delta and United so much? A couple of suspects here. I think the very biggest one is that American is quite a bit less international than Delta or United, much more of a domestic heavy airline. And we know that international right now, particularly long haul international, is just totally gangbusters, or certainly was this summer. So American didn't participate in that segment as much, and that kind of they didn't have that tailwind. A couple of other things. I mean, Q3 does tend to be a little bit less of a outperforming quarter for American. They do have a lot of north-south routes to South America, to Florida, the Miami hub, and those tend not to peak in the summer. So there's that. One other thing that I found interesting, it's not the first time they've said this, but American in their call, which actually at this point we're talking, by the way, on Thursday morning at about 11 o'clock Eastern, and I have not had a chance to listen to the whole call yet. I listened to about half, and one of the things that was said is that American is earning, I want to say 400 million. Let me see if I have it. Yeah. So I'm giving you a quote here. We produced probably 400 million less in frequent flyer revenue than what the industry leader does right now, presuming they're talking about Delta with their American Express card.
I think it's
So,
safe to say Delta is the is the leader there.
right. I think we can say Delta's the leader. Now, United renegotiated their contract with JP Morgan Chase. So I think that's performing better now too than it was. United used to complain about that also. There's like, oh, Delta's making so much money. We're not, we have a inferior economics. And I think they've renegotiated that. They haven't talked about it since. And so I assume that they're happy with the economics now. American clearly is not happy with their economics. I believe they work with Citi and Barclays both. And I think they're clearly indicating that they want to renegotiate that. So we'll see. Now 400 million, on 13.5 billion in revenues just during this quarter. I wouldn't say that would, that's the big difference there between them and Delta and United. But perhaps, if they can get that going. Now, all of that said, there's no issues with demand in America. And they said domestic is, what is it? What they use? And it's the word steady. I think everybody's using the word steady.
Steady, exactly. And I want to reiterate for our listeners that after the surge in domestic travel that U.S. airlines have seen over the past 2 years, steady is to be honest good. That's still a strong number. It's probably just above 2019 levels. It's just the growth has slowed down, especially as we wait for more corporate travel to come back. But yeah, steady was the word American and others used.
Right. And then international doing great, premium doing great, both domestic and international. Americans said now that they have their new pilots agreement, yes, it's more expensive in terms of compensation, wages, benefits. They also, as part of that contract, sounds like they have more flexibility with pilot training, and they kind of move pilots through the system a little bit more efficiently. And it sounds like that could help them rebuild some of their network that has been lagging since post-pandemic. I'm thinking of the regional network in particular. American has always been very bullish on the regional network. They said it's there's a lot of these kind of smaller cities, smaller markets that other Delta and United don't serve, Southwest doesn't serve, so they can they have a lot of market power there, and they can drive demand from those kind of places through their hubs onto international flights, et cetera. So I think American, is telling the investor community, wait for, you're going to see some upside there.
Yeah. No, I thought it was really funny in the part of the call, and I similarly haven't listened to all of it, how when asked about the challenges sort of Americans facing in the short term, they very much pivoted and were like, oh, don't look at just the current quarter. Quarter by quarter is going to be ups and downs. Look at all these gains that we have coming, and Vasu Raja, Chief Revenue Officer, talked about exactly what you're saying. We have these regional planes that we're going to get flying again next year as first officers upgrade to captain at regional operators, and that's going to drive more profitability because these markets have higher fares, higher margins, and yeah. But it was funny how I was like, don't look at the current ups and downs. Look forward.
Right, there's more to come, and don't forget too that they just had their alliance with the Northeastern Alliance with JetBlue busted up by the feds. So they are kind of rebuilding New York and Philly now. And a lot of interesting. Yeah, it was a good call. A lot of all the calls were good. The Delta United's calls were good.
What did United say? So we talked about domestic, but what about international? United is the largest international, at least long haul international of the U.S. airlines. What did United say?
Well, United's call was particularly interesting because they were really bad mouthing the ultra low cost carriers. Not the first time that Kirby has done that, but. They really believe that there's been kind of a paradigm shift in the industry where, because of all these supply side constraints and other reasons as well, the ultra low cost carriers are just that business model is broken. And I'm talking about Spirit and Frontier. And if you'll recall, about a month, mid-September, Spirit and Frontier came out with this just very, very bearish investor guidance. You're going to lose all sorts of money, whereas United's making all really good money. So that was kind of a prominent theme in the call that I thought was very interesting. But yeah, I mean the United is transatlantic incredibly strong. Trans-Pacific, incredibly strong. I think domestic, as we said, steady, stable. Premium, incredibly strong. So it's and loyalty, and even for Americans too. Actually, I think these loyalty programs too, all separate from the credit card. I mentioned American has some issues with that. Their co-branded credit card deal with the banks, but just the loyalty programs themselves for all three airlines, I think, are very, very strong. I mean, people are signing up for the cards, and they're getting a lot of. The American, for example, mentioned that a lot more. If you look at the subset of their passengers who are elite frequent flyers, let's say Advantage, but they're the ones who are more likely to book their tickets direct, which American loves because it can market to them in unique ways. And it's cheaper too. Yep, they don't have to pay the GDS fees, whatever. So yeah, exactly, and even more than the cost. I think it's revenue is very important too. They want to be able to control that, have the direct relationship with the customer, so they can market to them in their own way. So yeah, so I think that's been good. So United, yeah, all that went really well for United. Just everything seems to be firing on all cylinders. And then they, United is interesting because they're very bullish on aircraft ordering, and
yes.
There's a big industry debate about are they over getting too overzealous with their capital expenditure on aircraft. I think there's
I don't know. I like the whole debate. I'm just kind of like, all these orders, it's a lot, but we know that airlines can spread them out, delay some planes. There's a lot that can happen. I do not believe all of United's planes are going to arrive when they're scheduled to arrive today. Not to mention, and I've said this before, United is not as far along, at least on its narrow body replacement, as Delta or American are. American had billions of dollars in fleet replacement needs in the knots, and no, not in the knots, in the teens, and they're through that now. Delta has been doing it in a more metered fashion, but more continuously than United has. So I don't know. I'm not terribly concerned about that. We could see a lot of these planes delayed if demand is not there. But United also has some very real aircraft replacement needs.
For sure. And on the wide body too. I mean, the wide body side too, they still have like old 767s that they
I flew an old 767 yesterday. I mean,
oh, no.
it does the job. It was perfectly fine, but
yeah, okay.
But I'm now curious when it was delivered. But I was definitely on a 20 or plus year old plane.
I have memories of flying a United 747 back from Beijing to, I don't know where I was going, New York or whatever, and maybe Chicago. And it was just like a very old product. Obviously, a couple of years ago, they don't fly those anymore, but sometimes you have to worry about those old products. But no, it's good to hear that the 767 was met good customer standards, because I know they upgraded those. So
all right, yeah, it was a 23-year-old plane yesterday. That's 20. So a younger 767 as they go, but still, it was but those planes need to, I mean, a 23-year-old plane now really has a useful life of about 30 years with a lot of maintenance. So, I mean, that's retirement by 2030, if not sooner. So, United definitely needs to do that.
Yeah. And I always remind people too, it's not just the when you replace a 767 with a 787, you're not only getting much, much better unit cost, better fuel burn, better maintenance, all that, but you're also you're getting more range, you're getting a better in-flight product. So it's there's a lot of compelling reasons to buy these new planes, which United is doing. And then a narrow body side, interestingly enough, I think one sort of big theme for United's management is that we were totally flying way too many 750, 70 seat regional jets that were just inappropriate for these very big hubs we have. And we want to get those out and put in full size narrow bodies, A321s, the Maxes, and that has the virtue of really getting big unit cost. The economics of that are going to be so much better. I mean, if you take a 737-10 Max versus a CRJ 700 or an E170, I mean, you're getting these huge CASM gains. Now, there's a lot more seats to fill for sure, but they're also saying that we have this basic economy product where we can we don't have to we can charge the same fares as Spirit and Frontier, and throw that person in the last seat of a Max 10, and it's still like totally worth it for us. Probably if they leave some of those Max 10 seats open, it's still, economically, they're better off. So, their argument
Right.
is a good one. I mean, there's always, the question of degree. Is it, should they have ordered fewer? Hard to say, but you're right. I mean, your initial point is correct one. I think that we don't know exactly when they'll be delivered. I mean, they could be spread out over longer than even United expects.
Right, exactly. What was I gonna say? And we've seen on the upgrade strategy, we've seen Delta do that over the past decade. I remember covering their first their order
Yeah.
for when they bought the 717s to retire CRJs in what was it 2012, 2013. So it's been a successful strategy. We know it works. Uh, United just has to implement it, and it's coming for sure. And they've got some very strong hubs like Denver and uh, Newark and Chicago. They can add seats and flow more people through, and probably boost those revenues at a low cost.
Yeah, yeah, definitely. And I think they see a lot of international potential too. And that one's maybe a little more suspect because you kind of wonder to yourself, can international ever be as good as it is now? It kind of feels like the top of some sort of
Yeah, when
cycle.
I saw Kirby's comments there, and I was like, "Ooh, international has." I mean, it goes through a lot more ups and downs than domestic does. So it's
Yes.
booming now, but does that mean I remember Asia was the leader for a while in the early 2010s. Then Asia was lagging, and Europe was ahead, and like it's just, and then Europe was under pressure from. It's I don't know, but
Yeah, I
all
remember
right.
my old colleague, my old colleague Seth Kaplan always used to say, like, you have to be careful because on you can lose a lot of money on international, flying these really expensive wide bodies. Once something goes wrong in the Middle East, or there's a bird flu episode in Asia or something, and things can fall apart really fast, and it's hard to redeploy these really very big aircraft. So
Right,
domestic
right.
tends to be little more. I mean, if you look at all the most profitable airlines in the world on margin, they tend to fly just narrow bodies. I mean, you think the Copas of the world and the Southwest and the
Ryanair and
Ryanairs and the EasyJets and EasyJet. By the way, that was a couple of weeks ago, but they were the only other airline that's other than the big three that, as far as I know, that is uh, reported their Q3 results so far, and their margin was 21%, which sounds really, really, really high. It is. It's good margin, but just remember that is a very, very seasonal airline. So you're gonna have the super peaks in the summer, and then you're pretty much guaranteed to spill red ink in the winter. And then at the end of the day, you just hope the summer surplus was better than the winter deficits. But and it should be. I mean, I think things are going well for EasyJet, but we're not supposed to be talking about them, Ned, right?
yeah. Well, your comments about that sort of reminds me of American and telling analysts to look at the opportunities ahead and not quarter by quarter results. Because I mean, you're right. American has made a big investment in being the largest domestic U.S. airline. They're not as big internationally, and that might be bad this year, or not bad is probably the wrong word. Not great. Let's say that. And but like you said, domestic has over the long term has proven very durable, and so that speaks to American strategy. Probably will be good for it. Not probably will be good for it in the long run. Just right now, it's not that great.
Yeah, you would think. I mean, obviously there have been periods in, U.S. airline history where domestic has been very rough. So I mean, it's a hard business wherever you are. but,
Right.
but,
Yeah.
uh, but yeah, it is. My only point there was that, yeah, if you're overly zealous about international, it's just important to keep in the back of your head that, as Seth would say, you can lose a lot of money on international. Things can
Yes.
turn for the worse very quickly. But yeah, I mean, United will say that look, during the pandemic, a lot of foreign competitors took a lot of capacity out, retired a lot of big planes like the A380s, and they're well positioned to grow. And they'll also say that because one of the reasons why they're ordering so many of these planes is that Boeing and Airbus are going to be probably production constrained for many, many years. And if they're the only ones, if they're in the front of the line getting 787s and nobody else can get them as fast as they can, well, that's a competitive advantage abroad too. So, uh, add that to the arguments for buying all these airplanes.
Absolutely. Jay, with that, listeners, we're going to say goodbye now. Listeners, you can reach me at er@skift.com. You can reach Jay at js@skift.com. Jay, always a pleasure.
Always a pleasure. And I hope that I'm going to see you, Ned, in Dallas, Fort Worth on November 1st for our aviation forum. And I hope to see a lot of our listeners and readers there. There'll be a ton to talk about because we're going to have a lot more airlines that have reported earnings by then. So, see you in Texas.
Thank you for joining us for this week's episode of the Airline Weekly Lounge podcast. Check out airlineweekly.com for a new issue every Monday and updates on the latest airline news throughout the week.